Options Tender. I'm Dwayne, your host with Options Tender. We do these updates, almost every single day. If not, we're on the Patreon, we're on the Options Guy, free Discord, all that's in the description. So I just wanted to take a time out here today to say thank you for all the support from everybody, whether it be monetarily, whether it be emotionally, friends, family, trading. So much camaraderie that has allowed me to be here at home, travel with the kids and the family, do all sorts of events and work my way around, reach my goals. So, if there's any way that I can help anybody else do the same thing, just message me on any of the platforms, Instagram, Twitter, Facebook, all of them. So I just want to take the time out and say thank you. And then we're going to go over, let me bring on the charts here. Enough of that. If you are new here, go down to that bottom right-hand corner, hit that Options Tender logo and subscribe. And don't forget to hit that notification button because we do these videos often and we keep you updated. And we try to educate at the same time while we're doing these updates. And we really get deep into that with Patreon. First tier is $5 only. We have the SPX on the daily. We had the ending diagonal here that we had been monitoring. We broke down from it, back tested, couldn't get back over the 8 MA, rejected off the 20 as well. And now just yesterday over the weekend, we gapped underneath the 50 MA and had a great push down, bounced off. We had a nice reaction off this 100 MA. I don't think that's going to hold. We did have an inside day today, and just at the end of the bell, we started to push down. You'll see. I'll actually show you ES also so we can look at that. But right after the bell, just hideous. It started to creep back lower, the move that we were expecting during the day. But no matter. So what are we looking for? We're looking for fifth wave down. We'll go on that 65-minute chart to confirm this, but we're looking for this confluence down here, this rising pivot along with the 23.6% retracement. That would be a wonderful 5-wave move down. And then we'll be looking, this is going into FOMC. So if we get a nice gap down tomorrow into this area, we're going to be looking to start some calls. We'll be laying in some calls on its way down, and we'll be looking for a B move up. Okay, we're not looking for new all-time highs. This is just the beginning in my mind, the first leg of a few to go. I do suspect we'll be going sideways for some time before we actually start to lift off into new all-time highs and beyond. So the first step here, wave A. Okay, now let's go down to the 65. Well, first of all, the MACD, you see it cross and we started to accelerate. That was a breaking point. It's been going sideways, up and down sideways for a while, but we actually started to accelerate, and you see the histogram when it starts to move. That is definitely the move we were looking for. Very similar to other past moves, but this one we suspect, and it has gone underneath the 0 line, which now means we are in a bear trend. The MACD is saying we're in a bear trend. We are underneath the 0 or the 50 line in the RSI. All these were supports in the past, but we made lower lows, lower highs, and lower lows down in the RSI. We're not in oversold area yet. We're down near about the 34, 32 area. So we have room to run before, which I suspect will have another leg down in a smaller time frame, which let's go down there. 65-minute. We use the 65-minute candles, you guys. So we have each individual candle. We have even candles throughout the trading day, excuse me. So what are we looking for? Breaking this down after this ending diagonal, we did a throw over. We started to chop back and forth down. Everybody was buying the dip, so it wasn't a nice clean move for wave 1. But we got that wave 1, wave 2, and we ended up wave 3, we suspect. We had a nice move back to the 50% retracement, which is a little deeper than we suspected, but we didn't close underneath there. So we had the 386 retracement, which is typical for a wave 4. It coincided with the support area and now resistance, and we haven't closed above that on the hourly candle, not once. So that became great resistance. You can consider that the 4th wave move up, and now we're actually looking for one more wave down. As you saw on the last one, That's our rising pivot along with the 23.6%. And we may not get it tomorrow, but FOMC is tomorrow. So that's a good catalyst to, if we gap down, somehow we gap down a tremendous move down to this area or maybe to the gap, that's when we'll start adding on calls right away. Because we think if we gap down real low in the FOMC and we have the meeting with Powell, that will just be a good catalyst. It was going to happen anyway, but that'll be a good catalyst for us to make a great big move back to the upside for our wave B that we're looking for. We don't think we'll break this area. We are looking to target that. The typical wave 5 move, we have the 100% retracement in the 618. Extensions. And so, this is a typical point where a wave 5 would end, but we'll see if we can get our 5-way move down a little bit further. So we'll be monitoring. We probably won't add any real calls, maybe just a starter move at this point, but we'll really be looking for the gap. And if we get down from the gap, that will be our target area right below there with this rising pivot and everything. So we're really looking for the end of the week. Getting down to this point, we had the expected move here at the 43.39 area. We broke through that, and we're going to retest it. We're actually retesting it over after hours on the the S&P futures. But we suspect that we might just kind of hold there overnight. But if we do start to break down, we'll be actually preparing ourselves for a move up. So typically on a wave 4 to 5, you see how the with the MACD hit the real low here and real low on the RSI. Well, we suspect that when we come back down here for wave 5, that we'll start to make lower lows, but we will make higher lows on the MACD and RSI to make divergence. So we will be looking for that divergence here coming up soon, whether it be tomorrow because of the FOMC or throughout the entire rest of the week. And maybe we'll set up for a powerful Friday, a bullish Friday we haven't had in a little bit of time here. I believe we had a couple, 2 or 3 Fridays in a row where we were down pretty big. So we'll be looking for that move down, and perhaps we'll be setting up into Friday and a good follow through for Monday to lift off. Okay, so let's go. Let's just confirm ourselves with VX, the fixed futures. We like to use this chart just to give us an idea of what's happening. You see we had this falling wedge, bullish wedge. Well, we broke out of that point. We're over the 200. We're over all the MAs. So really looking bullish, which means bearish on the market here. And there is a, let's just go ahead and put just a line here to just show there's some resistance at this point that we're at around the 25 area. Let's just go ahead and change this, and we don't need any words. Do not show. Let's make it a red resistance and a solid line. So let's just show that there. You see so many points that we touched and used as resistance at this point. And now it's still resistance until we close above it, but that'll be a good point for us to reference if we get over that we may go start moving much higher at that point. Okay, so that's just kind of a gauge for us, the VIX futures. Let's go over to SPY. We like to look at this one just for not only for a point of view. It looks just a little bit different. You have much more of a like a dragonfly doji candle. It's a bullish candle, but to confirm a bullish candle like this, you need follow through. We did not get that follow through, and that's a problem. That's an issue, and it's right at the gap area, so we couldn't fill the gap. Got about halfway through and started to back off of it. So we're going to retest the 100 MA once again. I do believe we're looking to gap under at this point. We'll have to check what's happening in the morning. I don't need these alerts right here at this point. So we're rejecting all this area. We're looking bearish. And like I said, here's the resistance or former resistance, now support that coincides with this 23.6 and also this rising pivot. So that's just a real clean move. If we do get down to that point, that'll be a great spot to to buy some calls. I won't wait until that point because I don't suspect we'll go any lower than there, but we could come short from there and actually start heading to the upside. So I'll start at later dates and then work my way. If we actually do make it to this point, then I'll get real aggressive with some of my calls and really push for the weeklies at that point. But really what we look for on the SPY chart is the volume. There wasn't a huge amount of volume. This was considered, on the SPX, it was an inside day. This one was more like a failed follow through. I don't know what to call it. It's like a cloud shadow, one of those. Doesn't matter what the name is. It's just not real bullish. We didn't have the follow through, but we didn't have the volume either. So obviously that move was pretty lame. Let's just put it like that. We didn't have any follow through pushing through the candle, the supply here. See if there's any demand, but I said supply, I meant demand. So anyway, that's all. We're looking at the volume. It didn't really confirm any move at that point. Okay, we're still not over sold, and we're really ramping down on the MACD, the momentum. So that's it. That's all we want to look at today, you guys. Thanks for joining me. And again, I want to thank everybody for your support, and my family thanks you and everything like that. So thanks for joining us here at Options Center. We will be talking to you tomorrow. Join us in the Discord.